Welcome everybody to a new video of Tradomics. In this episode, we're gonna give an update regarding all the major US indexes. Of course, as for the last analysis that we issued, we're gonna start with the Nasdaq 100. So in the last episode, we were forecasting actually to have a new rally from this low because we were expecting to have a push back to the upside in order to start a new T+2. So given that with this high, we were already closing a cycle of a total duration of um, 44 days, which is the maximum duration of a T+2, we were expecting, given the fact that this T+3 or T+4 is was already broken with this candle, and therefore we were expecting just a prosecution to the upside. The natural um, trend would have been to have another T+2. So basically, from this top occurred on the 23rd of May, we have had a total duration of 31 days, and therefore we have completed now the T+2. Now we have had this sharp candle, the long red candle here, where we might expect what? We might expect a new at least T+3. And a T+3 has to retrace or has to have a pushback to the downside or a certain amount between 13, at least 13 candles below the top from which it started. So therefore on the 10th of July. So we're gonna update the chart, and as the analysis was correct, now we can say the following. First of all, also I give you the details here. We have had a close of a T+1H. So let's move this one also up here. And we have had also a close of a T+1H here. You can always check the total duration. So we have at 18 days, and here we have at 15 days. Now, what is important now to flag is the following. So first of all, here we might have the beginning of at least a T+3, but it's too soon to verify whether this is a T+3 or not, because if this is a T+3, the first natural target would be to go below the swing. So it means that we have to still have a downtrend over the short term of at least 3%. And also, we will have another confirmation if we go down to this low. So at 19,472. And of course, we need time. So if we don't have the two conditions, then we cannot say this is a T+3. Do we still have time to go back to the tops? Yes, of course. If we gauge the total duration, we have 75 bars out of 89. So it's not given by fact that it's a candle in which we can start a T+3, but we still have time to make another T or a T+1 upward cycle and then going back to the tops. But in terms of time, we have 14 probabilities out of 89 to go down, and to go up, 14 probabilities out of 89 to go up, and the rest to go down. So for a matter of statistic, here our forecast for the next, at least the next 2 weeks, would be to proceed to the downside. And this will also allow us to do what? To start closing a T plus 3. So T plus 3 means that we need to close a T plus 3, so 3 months downward cycle. But also be careful, because now we have enough time to close a T plus 5. So we have 245 bars, so a median duration in which we can start, if they want, or if funds want, to start a bigger retracement, and therefore having something similar to what has happened here as the beginning of a T plus 5. So we cannot go back to the top for at least 3 months. Now, bear this in the back of your mind. It's not given that we can start a T plus 5, but we can have the first T plus 4, the second T plus 4 divided in the first T plus 3 and the second T plus 3. And the close of a first T plus 3, a second T plus 3, and therefore the closure of a T plus 5. Okay? But bear in mind that for the short term, we have more probabilities to go down rather than go up. Especially, we have 14 out of 89 possibilities to go back to the top and the rest to go down. Regarding the Standard & Poor's 500, we have basically the same situation. So as for the last analysis, we were saying that exactly as on the Nasdaq, we could have proceeded to rally on the upside, and now we have reached a total duration also here of 71 days. So we have had the first T plus 2 and the second T plus 2. We can also here update the chart. We have had the split of the T plus 2 in 2 times a T plus 1, so that we can put a T plus 1 upward cycle. Total duration of the first T plus 1 upward cycle has been of 19 days, and the second one is now 14 days. Also here now we have to be careful, because we can have a retracement for the beginning of a T plus 3 upward cycle. And also here with the T plus 3 upward cycle, here it's the first level for the retracement. So we need to go back down to $5,446. But as always, let's put a question mark, because we still have time to proceed with the rally, even if time is getting stretched. And we can also gauge the total duration. Here we have 58 days for this T plus 3 or T plus 4. We need at least a week to close the T plus 3, because in order to close any cycle, we need a duration of 3 degrees less compared to the cycle in focus. Therefore, we need a weekly cycle that has to be negative. So that allows the closing of a T plus 3. And then let's see whether we can go back to the top. Also here, as for the Nasdaq, we have a total duration of the T plus 5 of 241 days. So basically the same situation, nothing particularly different here. Okay. So that's the situation on the Standard & Poor's, and even here, what we can expect is to have, in terms of probabilities, a downward trend rather than an upward trend. But if we go back to the tops, you already know how long we can keep the rally alive. Okay, let's move to the Dow Jones. So this index has a different situation compared to the Nasdaq and Standard and Poor's. According to the last analysis, we said that this swing and this swing were two particular levels to monitor to understand the future evolution of the price. So we have had during the latest weeks, then a violation of a break of the swing, and we basically closed the T or the weekly downward cycle with the swings at 11 days. So here we were also foreseeing the beginning of the new T or weekly downward cycle. At that particular point in time, we had 27% probabilities to continue with the downtrend and all the rest to say this is a new T. But we had at the end the time to continue to proceed because we know that a weekly cycle can last until 11 days, and this was basically the result. So now we update the chart. So this weekly downward cycle started on this swing, despite the probability were definitely less. And in order to calculate the probabilities, given that we had 8 days out of 11, you can just make a calculation 8 days out of 11 how much the probability is to keep going down rather than going up. So 8 divided by 11. So 27% was to further go down and the rest to go up, but that's what happened. So we reached the maximum duration, 11 days. Regarding the upward cycle, what happened? So we were saying also that this swings was a critical one, and if we were going back to the tops within a time that was not even the minimum time for a weekly upward cycle, we could have further extend the rally. So it happened that after 4 bars with this candle, we broke up the weekly upward cycle, and we had actually the completion of the TU or the weekly upward cycle after 7 days. So here the framing was correct. So this is a weekly upward cycle. Now we have another weekly upward cycle, and now we have reached a total duration of 9 to 12 days. So here this swing is potentially the beginning of another weekly cycle, and here we are basically heading towards this eye, because here we have again another situation which is pretty similar to the Standard and Poor's, where in this case we have less strengths, but because we have a T plus 4 divided by the first T plus 3 and the second T plus 3, and given that this top is higher compared to this one, in order to complete the cycle, we need to basically have candles that are finishing towards this area, or at least above $40,000. Okay, so we are expecting here potentially have another further tops, but you also have to keep in mind that now we have reached a duration of 35 days. So from this stop, we have 23 bars. So it's a T plus 1 hybrid. So from this stop, we might have another, it's not even a TU, it's at least a T plus 1 even, because we have had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles below this the stop. So here we have a T plus 1 or even a T plus 2. And the fact that here we have a T plus 1, a T plus 2 can also help us to say that we might incur into other uptrend. But also keep in mind that here we have the condition to have a T+1 and T+2. But given that time is also running out also on this cycle, we can have another top and then starting to retrace, because here it's a T+1, T+2, it's, well, 9 bars below this top are really few to say it's a T+2. So probably here I'm expecting another top and then another retracement, because here I don't have the conviction that we have a T+2. And we have now a duration of, for a downward cycle of 59 to 60 days. So here we should start seeing also, as for the Standard & Poor's and Nasdaq, a retracement to close a T+3. So consider this swing mostly a T+1 rather than a T+2. But bear in mind that we might start to retrace for the closing of a T+3. But that's short term. But mid-term, we have to go above the stop. And we are basically heading there because we need to complete another rise for 0.89%. So we are really, really close. So let's move to the latest index, which is the Russell 2000. On the Russell 2000, we have another interesting setup. So first of all, as for the last analysis, we were forecasting the beginning of a new T+2. We said that this swing after this gap up was potentially the beginning of a new T+2. Actually, we were in a situation where time was suggesting to have it. We had 36 days, but truly the beginning of the T+2 was here at 40 days rather than 36. So here we had the new T+2, and with this new T+2, we had also the rising of the price as forecasted. So here we can remove what we were saying, and now we have this with today's candle, so this top that went over this top. Now this is interesting because potentially here we have the beginning of a T+5. Therefore, the extension of the cycle will be to the upside. So here we have really interesting condition. And we had this break after 72 bars, so really few bars below the top of a potential T+5, which means that we can have roughly 120 days at least to further proceed with the rally on the upside. So bear in mind, this is a total for free information. But before it, we have also to gauge the time, and here we have arrived at 72 bars. So therefore, we might expect the beginning, as for the other index, of a T+3, then a further retracement. This will allow the closing of the first T+3, and then back to the top. So that's the situation we have on the Russell. So for the time being, we can say the following. So here we have at potentially a new T+2, but we also expect a T+3. So let's put this T+3 here just to have just to bear in mind that we expect a retracement before going back to the tops. And potentially here we have a new T plus 2. So, of course, if we frame the chart like this, we have slightly different condition, because if here we have a T plus 2, then the natural, let's say, trend will be just to the upside. But also, we cannot forget to gauge the upward cycle. Here we have 73 days, and we still have time to go up before having more consistent retracement up to 89 days, which means the 5th of August 2024. Okay, so here I just put an arrow to bear in mind that we might have shortly a retracement in the next 15 days, so in the next 2 weeks. But given the fact that this bigger upward cycle is broken to the upside, then what we can expect is further rally to the upside. So thanks for watching, and see you to the next episode.